to the SPY. Right, good morning everyone. This is Anne-Marie Band. This is ETF Huddle, part of the morning Benzinga Pro report. And what are we looking at? We're looking at SPY. On the month, it's got an maybe outside month going. On the week, last week was an inside week, so we're going to watch for the break above this area for a breakaway. We're chopping around at 413. Notice where that is on the daily, right? That is natural resistance. The open and close of prior days, the wicks coming around, but it's in a very heavy and congested zone. And so my thought is that this most recent area is a new area of contention. And so what we would want to do is wait for the chart to break up above, I say 414, and then see if it builds a topping pattern. If it doesn't, jump in with that long 414 at the money expiring today. You could also pick the 412 if it fades on anything into the early part of the morning. So we're looking at a balance, a range between 409 and 415. That's what we're looking for. Pullbacks are buy zones, but they could also be very deep. Friday, I really missed the buy zone. I missed the sell zone, really. And I should have waited on the buy zone coming into the floor of support. I just was not fast enough to rethink that as we started losing the level. So what's going to be the level that we lose that makes us go, whoa, maybe this isn't a long? That's going to be 412, 412.40, the low of this morning. Low, if we lose this pre-market level and you want to go long, I say wait until it comes all the way back here. If it recovers, you look for a bottoming pattern, looks just like a topping pattern, only upside down, and you're off to the races. But in general, it looks like a buy the dip day, as has every day for the last, I don't know how long. It's been a while. Almost every single one of these candlesticks that's red has got a long wick at the bottom, and that means people are buying the dip. For the Qs, you can see that here, the Qs on the day, from this perspective, it made the high on Friday and then completely collapsed, but still old resistance, new support, buying zone at the low of the area on Friday. And now we've got this inside candlestick building. It's above the close. It's gapped up fairly high. So that's going to be the line in the sand that says, you know what, if you lose this level, probably going to sell a bit more. So you want to watch it recover that level before you go long. Here, if you're trying to trade it tightly, I would say, you know, this is the number that I would look at, 325.46. All right, let's look at the leveraged ETFs. SPXL holding its own, still an inside candlestick from the week. Let's see. I'm not sure these guys are printing. No, yeah, sure they are. All right, so this is the zone that we left, 73. That's a nice buying area, right? 73, old resistance on the wicks and support, 73.20. We are above 73.78, but inside of the open of the prior day. So we are trying to lift, right? Where? 74, 74.70. Watch for sellers up around this area, 74.70, to take some profit. Pullbacks, again, buy zones. The opening tick is just a bit above 73. That's going to be the floor that you want to look for. You don't want to be buying if it gets below this area. Just let it do its business. If you want to sell, you can see high, lower high, lower high, lower high. Lose this congestion area here, 73.46. Price action will open up the trade, and then if you lose 73, you can add to the position on the way down. TQQQ also leveraged. Here is the low, 1660. So I'm going to show you something that we use in the futures market called a balance range, right? So average 16 to 23 is $7, right? Maybe 16 to 23.60, 16. Let's just say $7. This first area up above 23 to go $7 would be 31, right? 7? No. Well, 30.60, 30.70. So the target region is right around here, and then the market will likely chop a little bit, and then you'll see the next one. It says 37.50. And so this area is sort of like a GAN area where you can have a doubling of the balance zone, as it were. All right, so that's where we are. Inside candlestick formation this morning, we want to get above 29 to keep hold of the price action, right? We want to get above that 29 area. If we lose the pre-market low, which is now sitting at 28.77, and you're thinking about long, you got to step aside. But this is inside the candlestick formation, so it could chop around and things could get very, very nasty. Okay, I do want to look at the IYR, which is the real estate sector. You can see that it's trying to bottom on a monthly formation, but it's still making lower highs. So the market is about 6 to 9 months ahead of the physical market, and in the real estate space, this still looks like it's in the midst of a bottoming. So nothing quite definitive there, just letting you guys know from that perspective. It's still caught in a tight range between 82 and 86. Your pullbacks are definitely going to be buy zones if we hold 82. The closest you can get to 82, watch it chop around, start to lift. You've got your floor, you can take the long. The next one would be the small caps here, the IWM. This one does not look as good, right? It's further down into the candle bodies, but it could just be in the middle of an entirely sideways bottoming range, right? Just sitting, chopping around in this area. We are bouncing off of this edge for the small caps this morning. So if you're looking at where they're going to, 174 to 175.40, people are still selling the tops of these areas. They're buying the bottoms, but Friday's bottom was a really steep dip. All right, that's it for me, folks. I'll see you all tomorrow.